What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and before I start, I do advise you to go and watch yesterday's video if you haven't already, just so you have an understanding of my bias and expectations for the week. And also, before we get started, I have created a mailing list as I'm going to start releasing newsletters, sending you guys materials and all sorts of free goodies. So make sure to click the first link in the description and you'll be able to join the mailing list. So yeah, let's get started. You'll see on the daily, we traded down, just missing that 50% level, and closed quite nicely at the open. So pretty much what we wanted to see, although we didn't quite touch the 50% level. To me, this does show a significant amount of bullishness. The fact that we didn't completely reach it does say to me that price could come back down there still and grab stops. However, preferably I'd like to see it as bullishness with the expectation for price to trade higher, which is what we wanted to see in general. So pretty cool day. If we drop down to the 4 hour, you'll see our price came down, grabbed stops below this swing low right here, and then instantly came off that quite aggressively, creating a bullish order block. So on this 4 hour, you'll see this is now a bullish order block. Why? Because we traded through it on the upside. As soon as we traded through that, this became a bullish order block. So now, just like I was watching this level, moving into Tuesday, I'm going to be watching this level to provide support. So this is going to be the lowest I want to see price trade moving into tomorrow. And what I mean by that is that if we lose this, then I'd simply expect us to trade quite aggressively deeper. But preferably price will respect this the same way we respected this. And to me, that will allow us to continue to see and seek higher prices. So let's go down to the 1 hour and you'll see I have my daily dividers. This red dotted line is the Sunday opening price. And you'll see how we're now above that. So, you know, this should now be providing a level of support. And you'll see that that red dashed line also lines up with a nice fair value gap, which is nice to see. But overall, we should be looking for premium PD arrays. Moving into Tuesday, we now have Monday's high, which was created at the beginning of the day. So we'll mark that out as buy-side liquidity to get traded to. And then I'm also going to be watching Friday's high, which is over here to get traded to as well. So overall, I'm pretty much bullish on dollar, like what I was explaining yesterday. With the very lowest I want to see price go is here. But preferably, preferably, price respects the Sunday opening price, and the reason for that is because again it will show a level of bullishness to help push price, and I'll see that as like institutional sponsorship. So we'll see a continuation of, you know, dollar being pushed higher because we want to see those buy side liquidity targets get reached. So that's what I'm definitely watching moving into tomorrow, but definitely keep an eye on this midpoint. If we lose that, I'd be a lot more cautious and probably stay out, but so long as it stays intact, I'm happy to be bullish with the expectation to look for Monday's high to get ran and that Friday high to get reached as well. Also, bear in mind this Monday high is relatively equal to that Sunday high, so there is definitely going to be liquidity residing up there. And then you can see we also have an opening gap here as well, so we can draw that out, and we should see how price uses this in the new day as like a barometer for price to allow it to find support or resistance depending whether we're above it or below it. But yeah, we can look more into that moving into tomorrow, but that's just something to consider. So that's everything on dollar. Hope that all makes sense. Again, if you haven't watched yesterday's video, go and watch that and then come here, just because there'll be a lot more context and understanding where I got these levels marked out. So now let's head over to GBP USD. We'll start on the daily there as well. And if you watch yesterday's video, you'll see absolutely beautiful respect of the PD arrays I marked out. So I drew our attention to the 50% level of this long wick, and look at that. You can't make this stuff up. Little mohawk above, and then we came off it absolutely beautifully. And you can see how volume closed below this buy side liquidity level I also drew our attention to. I was explaining that price is going to want to wick in this range quite a lot, because as far as I'm concerned, there is still buy stops up here, and if we're bearish, price is going to want to accumulate those in order to release at lower prices. So what you'll find is we do actually have an implied fair value gap between about here and here. What I'm going to do is I'm going to make this blue. So I'm going to be looking for price to try and seek to fill this as we move into the rest of the week, or move into Tuesday and Wednesday now. Very high, so I want to see price go now is simply going to be the midpoint of this, but I think on the 4 hour it'll be a lot more clearer. So let's drop down to, actually let's get the midpoint marked out again, just like we did with the Friday, like so. And I'm watching this level now, this midpoint now, to provide support resistance we need to send price lower. So let's go to the 4 hour and you'll see how that lines up nicely. Now there is significant weakness on pound, and we do have interest rate announcements and all sorts going on, so we can expect a lot of volatility. But I did like seeing this nice large down candle earlier today. You can see we also wicked into this fair value gap recently, and you can see we've come off it. So long as this fair value gap stays intact like this, as in, you know, price fails to get back above it, I'm happy to remain quite heavily bearish on pound, with the expectation to run into that daily fair value, implied fair value gap I was talking about. You'll also see there's a 4-hour fair value gap down here, just below this one. This one's a little bit more unclear, purely because it's implied, it's not clear, so to speak. But you'll see how price should start to work its way down there, moving in the new day. So let's go to the 1 hour. I have my daily dividers up, and you'll also see there's a nice breaker. So we have a high, a low, a higher high, and then price is broken to the downside. So yes, technically price can return up to that breaker, but the way that price is, you know, creating all this defense, as in we've got a bearish order block here, bearish order block here. To me, if it's going to go back up here, it's going to need a lot of work to do that, just to get to a breaker. So preferably, I'd like to think that this will provide enough resistance for price to be staying, you know, bearish and heavily bearish, in that price struggles to get higher, and will therefore allow a more easier move down into the south side liquidity. So I hope that makes sense. We'll have this south side liquidity marked out as targets, and then obviously we have this south side as well, which I drew our attention to in yesterday's video, but I don't think we need to worry about that for now. So moving into Tuesday, I'm just simply watching Monday's low to get targeted, and again that implied fair value gap. Let's go to the 15-minute, see if we can find anything. You can see there's relative equal lows below here as well. So I'd like to think that price can seek to trade into those. But overall, the very highest I'm allowing price to go is this level here. If price gets above that, I'd simply get out the charts and probably not mess about too much. Purely because it's lined up with the breaker, we should be seeing resistance at that level, and I want to see continued bearishness. But if we do climb above that, then at that point I'll probably just leave the charts to do its thing for a little bit and then have to reanalyze. But overall, yeah, pretty nice day. Absolutely beautiful turn in the market at the level we drew out. Now let's just see if it can hold itself and stay intact at that level. So finally, let's now finish on Euro USD. We'll start on the daily here as well. And you'll see that we nicely traded up to the 50% level of this as well. Now we do have a massive fair value gap that's formed after Monday, which is nice to see. So price should seek to try and fill that, assuming we're bearish. Again, same thing, 50% of this I'm looking to get respected. Excuse this. That's going to be the highest I want to see price trade. And don't get me wrong, again, if price does get above it, so be it. And if that's the case, we will probably start trading up into this rejection block level. But preferably, I'd like to think that it will provide resistance we need to send price lower. You'll also see I've marked out this bullish order block. Now, the reason for that is because I'm looking for bullish PD arrays to be broken through if we're bearish, right? So I'm now going to watch this level to be traded through on the downside, preferably moving into the new day. As soon as price gets below it, it will use it as a resistance level that we can sell at to then send price into this daily fair value gap. And you can see there's a nice clear 4-hour fair value gap right here. That would be nice to get filled. On the 1 hour, you can see we've just started the Asian session, so all sorts can happen then. But overall, this is going to be the highest I want to see price go. If we get above that, again, I'll step away from the charts, let it do its thing, and then continue. But preferably, I'd like to think that we can see continued resistance and, you know, seeking of south side liquidity with all these south stops below here. So it's going to be interesting to say the least. I think Euro's a little bit more consolidated compared to pound today. But yeah, again, look at that turn in the market. But again, one thing to take note of, although we have moved away from this level, it could simply be engineered. So what I mean by that is that they could have engineered this low to get taken, say, tomorrow. So we've got a low, we might create a lower low and then trade higher. And remember, dollar hasn't reached its 50% level yet. So that's why I'm a little bit more cautious, as in dollar could still come down and snatch that. And if that's the case, it will obviously send GBP higher, running into these highs, and then Euro higher, running into its high as well. So that's something to consider. Although these have reached its 50% targets, dollar hasn't. So there is technically still room for dollar to go and do that. But ideally we see support. So we are a little bit of a humming and ahhing right now, but we're simply just going to wait and see. One thing that goes against that point is the fact that we did run down below these stops here. So as far as I'm concerned, price shouldn't really need to come back down there again if we're bullish. But yeah, I guess we're just gonna have to wait and see. So that's going to be everything, guys. I hope you found this insightful. Again, don't forget to join the new mailing list. You can easily just drop your email in the link below. And yeah, I'll catch you tomorrow. Peace.